I just produced a video yesterday which shared what JP Morgan expected of OCBC's Q1 2023 results. JP Morgan analysts said to be underweight OCBC as they saw downside to the bank's earnings for the Q1 2023. They said that the stock is at risk of weakness over the next 3 to 6 months as the economy slows. They even lowered their target price to $11.50 a share. JP Morgan said that Great Eastern reported soft results, which suggested a downside of around 4% to OCBC's earnings. Great Eastern saw its Q1 2023 earnings grow by 10.9% to $244 million year-on-year. That accounts for 12% of Q1 2023 earnings estimates for OCBC. This is lower than the average contribution of 16% in the last 8 quarters. Well, OCBC just gave JP Morgan a tight slap. Is this JP Morgan talking cock? What they mean OCBC, Singapore's second largest lender, will suffer a 4% earnings downside in Q1 2023? Just now, OCBC reported a better-than-expected 39% jump in Q1 profit from a year earlier on the back of strong net interest income growth. OCBC, which is also Southeast Asia's second biggest bank by assets, said Q1 net profit rose to a record $1.88 billion from $1.36 billion a year earlier. Singapore's banks have been benefiting from strong inflows from wealthy customers amid global economic uncertainty because of the city-state's status as financial safe haven. Our loan portfolio was resilient, and our wealth management business continued to attract net new money inflows. This was shared by OCBC Group Chief Executive Officer Helen Wong in a statement. The bank reported a total net interest margin, a key gauge of profitability, of 2.3% for Q1. This is much higher than the 1.55% in the same period a year earlier. OCBC expected full-year net interest margin in the region of 2.2% or so. The lender said it was starting to see growth in cross-border flows after China's reopening, but it was also closely monitoring volatility in developed markets and geopolitical tensions. Looking ahead, we are watchful of tighter financial conditions which may slow global economic growth and elevate overall risks. OCBC, which counts Singapore, Greater China and Malaysia among its key markets, said net interest income rose 56% in Q1 from a year earlier. Return on equity rose to 14.7% in the first quarter from 10.6% in the same period of 2022. What do I think? Well, like I said, OCBC gave JP Morgan a tight slap with their Q1 2023 results. A 39% increase in Q1 net profit is really pretty good considering the fact that DBS reported a 43% in Q1 net profit. Also, JP Morgan said that they expected return on equity of OCBC to remain subdued because of the bank's current stock of excess capital. To this, OCBC gave JP Morgan another tight slap. Return on equity rose to 14.7% in the first quarter from 10.6% in the same period of 2022. Jokes aside, like what I said in my previous video, we want to read analyst reports to get missing pieces of jigsaw puzzle, but we want to stay suspicious at the same time. Like I said in my previous video, the sky is not falling. If OCBC is not able to find any suitable candidate to invest in or to acquire, I hope they would pay higher dividends. I am sticking to my plan based on my own analysis. I will be adding to my investment in OCBC at supports I have identified in its chart. I believe OCBC will continue to bring home the bacon. Congratulations to all fellow OCBC investors. To more good years.